In Tanzania, we had a random sample of women entrepreneurs in 2 cities of Tanzania. 90% of these women saved. How many saved through a bank? Only 19%. 40% used their savings to invest in businesses, but they saved under the mattress, they saved using jars, they saved using lock boxes. Very few of them saved through a formal sector bank. In East Java, in Indonesia, we have a random sample of 5,000, close to 5,000 entrepreneurs, male and female. 69% of the men save. 84% of the women save. Women save twice as much as men do, given their income level and the profit in this business. But who saves at a bank? Men outperform women saving at a bank 3-to-1. So women are disadvantaged because they don't have access to banks. But banks are losing a huge market opportunity by not having women customers. And we believe that only quality, sex disaggregated data will make the point clear and will build the business case. So this is why we are here, and this is why today we're going to be listening to leaders in the area of gender data for financial sector. And we are going to have 2 panels. In the first one, we will present a global gender data strategy and talk about the strategy and how different stakeholders can help promote gender data in the financial sector. And in the second panel, we will hear from inspiring case studies of different countries and different stakeholders. But before that, let me introduce our keynote speaker. And we are honored to have Her Majesty, Queen Maxima of the Netherlands, who is the United Nations Secretary General's Special Advocate for Inclusive Finance for Development. And I found out that she has been in this role for 12 years, nearly 10. And she's a leading global voice advancing universal access to affordable, effective, and safe financial services. Additionally, Her Majesty has also been the honorary chair of the G20 Global Partnership for Financial Inclusion since 2011. Queen Maxima has been a long-standing champion of gender equality and data collection. Data collection has been a linchpin of her advocacy agenda even before she took the role of special advocate. Reaching excluded groups, including women, is one of the 3 main pillars of her strategy advocacy. So we are thrilled to have Her Majesty join us today and share her valuable insights. And I must add, I was this morning at a meeting at the World Bank, and it was wonderful to see Queen Maxima bring up the gender gap issue as one of the main issues to achieve financial inclusion for all. So, Queen Maxima.
Thank you very much, ladies and gentlemen. I'm really pleased to join you today to discuss this very important issue of how to build strong gender disaggregated data and then how to act upon it. As UN Secretary General Special Advocate for Inclusive Finance for Development, and actually before that, I have been making the case for more than 10 years that data is really essential to achieve financial inclusion. And just a few hours ago, and if you are aware, I helped launch the latest edition of the Global Findex, which I have really supported from the earliest days. I have to say that in all my work and all my visits, it has been the most powerful tool for me to actually advocate for financial inclusion, measure progress, and also, really point out where should we be focusing in the future. So now, Thanks to the Women's Financial Inclusion Data Partnership, we're gathered to advance further on data, this time really with a targeted focus on women. And really, you have no idea how much I welcome this partnership. But before we focus on the numbers, let me address a question some of you may have, even though I might actually be preaching to the converted. But why do women need special attention when it comes to financial inclusion? Still, some people might actually have that question. Well, it might be still at least 3 reasons. First of all, women are essential to achieve wider development progress. We know that when women control finances, they spend more money on necessities like health, housing, nutritious food, education, and child welfare. Second, it is a very good macro stability policy. Women on average are stronger savers, you just talked about it, than men, so they're more likely to use savings to invest in their priorities. And this, of course, reduces risk of economic setbacks and strengthens overall social and economic stability. And third, you also mentioned it, it's just good business. And bank women represent a huge untapped market for financial institutions. Plus, women pay back loans at higher rates than men, they are stronger savers, and they're extremely loyal customers. Nonetheless, the new global Findex show the gender gap in financial services stuck at 7% points globally and 9% in the whole developing countries. And this hasn't really changed since 2011. And in South Asia, actually, they're the champions in terms of region with 11 points gender gap. Also, women-owned businesses are not well served either. Globally, around 80% of formal female-owned MSMEs do not get the financing that they need. The causes of these gender gaps are complex and come both from the demand and the supply side, of course. On the demand side, they include economic and social barriers that restrict women's independence, lower access to the official IDs required by bank, and lower ownership of the kind of collateral that banks are actually asking them to get some credit. Women also have lower financial and digital literacy on average, which also hampers the utilization of these products. On the supply side, they include products and services that are seldom designed to meet the specific needs of women, which include privacy, security, convenience, and low cost. So, how do we begin to address the gender gap? To solve women's financial exclusion, our starting point should be really data. We need demand-side insights into women customers complemented by supply-side insights into financial providers. Progress will come when we address both sides at the same time. So let us look quickly at where we stand with the demand-side data. New Findex numbers tell us that financial inclusion for women continues to be a very big challenge. The statistics are getting better, but 35% still do not have an account, and that is 41% in developing countries. But the Findex data also allow us to see some opportunities. India, for example, has been able to actually reverse this trend and managed to narrow its gender gap in the last 3 years, thanks partly on this unique biometric ID program that it actually had. So maybe this is a program that could be easily be copied around the world. Actually, they went from a 20% gender gap to a 6% gender gap. So this is very promising. Findex figures are not the only demand-side data countries need in order to serve women. Customer-centric policymaking demands more granular consumer data to understand women's pain points in using financial services and to more effectively shape regulation. Country-specific surveys allow for deeper insight and more targeted action. Mexico, for example, has been using its own demand-side gender data since 2012 to identify problems with access, channels, and usage. Concerned about big gender gaps in rural areas, policymakers expanded cash transfer programs targeting specifically low-income rural women, with the result that now more rural women than men have financial accounts. So this is a type of policy that apparently has worked. Financial institutions also need demand-side data because often they do not know their female customers. And one was banking survey of 29 institutions showed that 2/3 had not given consideration to women as a distinct market segment. 2/3. When Australia's Westpac Bank began to focus on women, their data revealed that women didn't feel banks treated them with respect. Their research gave them guidance on women's financial concerns, with saving and bill paying, for example, their comfort level of debt, and their need for financial mentors. The result has been really a really successful sub-brand designed around women needs with really very good results. Supply-side data, on the other side, is an equally powerful tool to address gender disparities, this time by charting the behaviors of service providers rather than clients. On a global level, and I'm very happy to say, the IMF Financial Access Survey has announced that building onto their pilots, it will include gender data as an integral part of their future rounds. This is going to be really a great addition. Just 27 countries were able to fully report on the recently released report, but that number should keep on rising. And I think I'm very happy because, we started this FAS and IMF, and we had, very little gender disaggregation data. They started a pilot. It was going to be very difficult, but we're getting there, and now we're going global. In addition to the FAS, a small but growing number of national governments are collecting their own supply-side gender data. Chile, which has actually been mentioned in the video, has been a leader in this front since 2002. Its supply-side data has generated a shifting picture of women saving, borrowing, account balances, and a lot more. Just last year, this data indicated that banks were charging women 15% higher interest rates, even though they have lower non-performing loan rates. So you can imagine the implications for action, and they're now being fully considered. Tanzania, also in the video, is at an earlier stage of data generation. Its new second-generation financial inclusion strategy will focus closely on women, and they are actually really asking providers to submit gender disaggregated data, so that would actually create a lot of change. And I know that Egypt, Kenya, Rwanda, and Zambia, here to present, are also developing plans to advance supply-side gender data. In closing, I'd like to leave you with some concrete suggestions for what we could do to move forward. Policymakers, including central banks, you have an essential role to play when it comes to supply-side gender data. You really have the power to request and champion the reporting of this data by your providers that fall under you. But even a lot of commitment, high-level commitment like yours, may not be followed through. It is not uncommon to find a disconnect between a central bank supervisory side and a statistical side. So beyond showing political will, you need to ensure good coordination among all your departments to really make this true. It is also important that relevant government agencies follow up on the information you glean from this data. For financial service providers, I really want to emphasize that serving women is good for your business. I encourage you to garnish and use data to become much more customer-centric. Complemented by qualitative surveys, data is the essential tool you will need to reach women, understand their financial concerns and needs, and develop services that can actually earn their loyalty. Today, many providers have no idea about the gender composition of their clients, nor what they want. Even the mobile companies, according to GSMA, just 23% of the mobile operators know this. They do not know how many women clients they have. So I can assure you, ladies and gentlemen, we can do a lot more together. Finally, for all of us, we're talking about data today, but numbers are not ultimately the point, right? What matters is that we analyze this data and understand its implications, and that we act on what we learn to address the long-standing gender inequalities that are holding us back. When we are making decisions based upon evidence rather than perceptions, we will be truly making a difference. And I wish you all the best of success, because we really need this type of partnerships to get things going And I'm looking forward to hearing all your plans to really make a reality. And I'll be there to support you. Thank you.
I am introducing now Ines Murray. She will be chairing the next session.
Thanks,
She
Myra.
is.
And thank you, Your Majesty, for such an eloquent and well-argued case for data. I'm charged with a very quick, difficult task of presenting the strategy, which you have a summary document of under your seat, in a very short time period. And so we have a hard stop at 4:30 when Her Majesty has to leave. So instead of breaking the panel, what we're going to do is we're going to do one round of questions at the panel, and then you can leave. Thank you. And then we'll continue the panel, because I do feel like we brought everybody from far and wide, and it's such an amazing panel, so we want to capture all of that. Okay, so as Her Majesty has said, the Women's Financial Data Partnership has really evolved since 2014, when it was started with GBA, the IDB, and Data2X, to embrace a number of different partners, as you can see. And last year, we hired the services of McKinsey & Company to help us map the role that data can and does play in the full financial inclusion of women. And I'm just going to give you a quick overview of what the main findings were. So through interviews mainly with central banks, and I don't have the clicker actually, with central banks and commercial banks, the strategy found that indeed more and better sex-segregated data could, A, encourage market entry by banks, B, provide information to policymakers to make more informed decisions around national policies to include women, and C, help international actors like the IFIs and DFIs and donors design stronger interventions. This is our theory of change, as you can see, and these proof of concepts, effective policies and business models will feed back into the system and become socialized within and beyond national borders. We came up with this framework, the pathway, financial inclusion pathway, and this really tracks the beginning point here is when people are unaware that women's financial inclusion is actually an issue, or indeed that there is a women's market, right down to becoming what Her Majesty said, Westpac becoming a global champion. A large commercial bank, very successful. We have a couple of these in the room today who are going to present their case. And so what data can do is move banks, central banks, donors, everybody really, along the stage from being unaware that there's a market in the first place, to being aware that the women's market is large and growing and has distinct needs and preferences, and that there is probably money to be made in it, to considering to take action, conducting feasibility studies, to taking action, implementing a women's market program, measuring its performance, and establishing it as a strategic segment, and finally, to becoming WeFi champions. In GBA's case, these are strong banks with excellent programs. This same pathway applies across all stakeholders. So what is the data that we should really be focusing on? Well, what we found was that the majority of central banks in the AFI network are in the stage, as well as banks, are in the stage between the awareness and consideration stage, but they're not yet taking action. So the strategy identified 3 key areas of data that really need to be developed. For policymakers, better and more granulated demand-side data, as Her Majesty mentioned, on subsegments of women, for example, women business owners, formal and informal, women farmers, etc., and on specific products that people have access to and use and the quality of those services. On the supply side, these data gaps are particularly acute, with very few countries, such as Chile, already mentioned, that gathers data on a national level on supply and use of financial services by women. In the Chilean example, it's very interesting that over the 12 years they've gathered the data, we've seen a flip in the percentage, the gender breakdown or sex breakdown of people taking housing finance. So it's really flipped towards women. Question is, why has it? No analysis has been done to understand why that happened. Is it underpinning demographic changes, women becoming greater heads of households, Or is it, in fact, some kind of policy that the Chilean government implemented to encourage women to take on or enable to borrow money? The second big data gap is really about understanding how policies translate into outcomes. And actually, when we did this research, very, very little has been done in understanding and analysing how effective policies are at the national level. And the third big data gap for policymakers is that really there's a lack of research that can quantify the correlation between women's financial inclusion and what regulators are charged with, namely financial system stability and integrity. This impedes their case for supporting women's financial inclusion, and more research is needed there. For the banks and financial services providers, there is likewise a huge need for more thorough national data sets that can help them to size the opportunity for serving women. This should be done by subsegment and include evidence on financial behaviours and needs to women top-down and bottom-up estimates of the women's market opportunity. This will help bank leaders understand that there's a massive opportunity. The second major gap is actually data on the business case for serving women. That is, the internal financial returns to a bank, upselling, cross-selling, revenue, profit, as well as impact on customer loyalty and net promoter scores. And the final set that we identified, last but not least, is that alternative identification and credit history data specifically is key to getting commercial suppliers to deliver to the unbanked and the many, many women who do not have traditional collateral, fixed property, that is required by lenders. And so with that, we're going to turn over to our expert panel to hear how disaggregated data can drive market development. If we can welcome to the podium, please, Dr. Tukia Kansasa Mabula, Deputy Governor of the Bank of Zambia, Julie Katzmann, Executive Vice President and COO of the IDB, Karen Groen, Senior Director from the World Bank Group of Gender, and Marco Espinosa Vega, Division Chief, STA, FI, and Coordinator of the Financial Access Survey at the IMF. Thank you. Okay, I have my stopwatch, so we have 18 minutes. Okay, so I'm going to start with Tukia on my far right here, although I know she's not far right. In addition to the key role you've played in promoting women's financial inclusion in Zambia as Deputy Governor, as well as Chair of AFI's Gender and Women's Financial Inclusion Committee, what have you seen in terms of your request from your financial sector to produce the data? Has that yielded any impact in the market?
Yes, indeed. We've actually seen concrete action. We've seen concrete action come out of the request for financial service providers to begin to collect sex disaggregated data. We actually have one case of a bank, beginning with the central bank itself. We have two strategic objectives that support women's financial inclusion. One is to increase formal financial inclusion by 16 percentage points, and the other one is to mainstream gender internally within the central bank and also externally in the financial sector that we regulate and supervise. And we have been encouraging through various tools and means the commercial banks in particular to grow their women's market segment. And one bank, I'll mention it, Stanbic, is a bank that then looked at data that it already had. Before they did this, they were very confident and comfortable that they were serving women equitably and without any discrimination in any way. They actually thought that they were probably serving women 50-50 with the men. But when they went into their data, they were actually astonished by what they found. They found that women only comprised 26.7% of their client base. But they also found good things, such as what Her Majesty alluded to. They found that the women were the better payers. They had the better payers when it came to borrowing. They had higher balances in their accounts, which means they were the better savers. And they had very low non-performing loans as a percentage of the lending that the banks had taken out. And the other research that the bank did with data that in fact was already available but had not been disaggregated previously, they found that they had the compelling reason to look further at the women's market. And this resulted in them coming up with a women's banking proposition called Anakazi, which not only provides for access to finance, but also provides other non-financial services such as mentoring, training, networking. And the particular managing director that headed this change was then transferred to another country. And I must say he has become a champion because now he's trying to replicate this in his new duty station. And another bank, which has actually got a larger footprint than Stanbic, which is Zanaco, was also inspired by this and went and looked into its data and also found that there was a case for growing their women's market segment. And both banks have joined the GBA and participating in capacity development to ensure that they have the best practices. And we have seen that concrete action taken by financial service providers.
Thanks very much, Tikia. And a lot of this is down to your leadership at the central bank. So maybe when you come around again, we need to talk about how we can translate all of this across all of the central banks. And we have a panel later. We'll be discussing some of the issues around diversity and inclusion and the importance of women in leadership to drive this agenda. And one such leader is Julie Katzmann, who's the Executive Vice President of the IDB and COO and a long advocate and promoter of women's financial inclusion. So Julie, on the private sector side of the bank, why have you encouraged the production of sex disaggregated data from your client banks? And have you any examples of that helping them make any decisions?
It will be no surprise that I do have examples. Right, so I'll give you a little bit of a story. In 2013, the Banking Association for Latin America, called FELABAN, inserted into its annual survey with the banks a question that we asked them to insert, which was, how many of you think, or do you think, women-led or women-owned SMEs are either unserved or underserved? 2013. Only 14% of the respondents thought that either women-owned SMEs were either unserved or underserved. The credit gap for women-owned SMEs in Latin America and the Caribbean is the biggest of any region in the world. And that number is about $80 billion. And only 14% of the banks thought that there was a problem. That was a problem. And it's exactly what Tukia said. You know, if you don't know you have the problem, how do you decide you're going to fix the problem? Now, I have good news and bad news. By 2016, the good news is the number had doubled, but it still was only 28%, plus 9% who didn't know. So really, that's part of why we are big proponents in, as Tukia said, you know, in promoting data, because we wanted to change that number. And that gave rise also to our Women's Entrepreneurship Banking Program, in which 17 banks in the region have joined that program. We have lent about $250 million. It's leveraged up to about $1 billion. And those banks can tell the story. So I'll tell two examples of how the data drove changes in those banks. Banco Itaú, which is the biggest bank in Brazil and in the region, decided they wanted to look at their digital banking product. Well, they looked at their data, and because they have it sex disaggregated, they were able to find out a few interesting things. First of all, use of the digital banking products was not related to gender, it was related to income. So men and women in the low income level use the digital product about 20%. And at the high income level, about 60%. But then they looked further, and what they saw was that they had a whole bunch of users who would consistently download the app, delete the app, download the app, delete the app. Okay. What they saw was that the app was too heavy for people who had prepaid plans. But what they saw was that most of the people who downloaded were women who were much more budget conscious. So they launched a Lite app. The Lite app does 4 things: pay bills, transfers, check your balance, top up your cell phone. The main app does 10 things. Now, 2/3 of all women, independent of income level, use the Lite app. And 2/3 of all men use the Heavy app. What they saw from that was that women cared about efficiency, speed, ease of use. Now they've taken that lesson across all of their programs for women and made much greater traction with women across their product set. I'm running out of time. I'll just say one other thing. Banco Pichincha used their disaggregated data to realize that women wanted insurance products. They sold women insurance products, and the women who buy insurance products, not only do women behave better than men in banks, but women who buy insurance products have loans that are 2.6 times as large. They save 40% more. They buy 60% more products. They stay at the bank more months. And there's one other thing, but I can't remember what it is. So you can see that this disaggregated data really does make a difference.
Thanks, and we're going to hear later from Banco BHD Leon, Daniel, and he can also, extraordinary figures actually on the insurance, women who use insurance in the bank and cross-selling, etc. So it's a very interesting analysis. So turning to Karen, so the Findex was published yesterday, and what were your biggest surprises?
So first of all, I want to just say I'm so proud that the World Bank Group, IFC and Bank, are part of this partnership because I think it's one of our best partnerships. So thank you, Inez. Thank you, Myra, for this. I had a little bit of heads up on the Findex, being an insider, but I have to tell you that I was really shocked, given all the progress around the world, that the global gender gap, which the Queen mentioned and Myra mentioned, is 7%, and the gender gap in emerging markets is 9%, has not budged since 2011, globally. I'm like, how is that possible? But of course, those global averages hide some other things. So there have been improvements in ECA, there have been improvements in LAC, and there have been improvements in sub-Saharan Africa, and this is fantastic. But there have been declines in East Asia and the Pacific and in South Asia. Now, the Queen mentioned India. Even within these regions, there are huge differences. So India has seen a surge in account ownership, and the gender gap narrowed from 20 percentage points to 6 percentage points. But in Bangladesh, 65% of men have an account against only 36% of women. So it pulls down the overall account ownership to about 50%. And in Algeria, where it's in the MENA region, 56% of men have an account, but only 29% of women do. So that pulls down the MENA average. Going back to South Asia, I should have mentioned this in Pakistan. It's got one of the lowest gender gaps. But I have to say the Pakistan government, seeing these numbers, is fully supportive of a universal financial inclusion strategy. I want to mention one thing before I close, which is that how this data has been used. This data has been really important for the bank group. We have something called IDA, which is the window that finances the lowest income countries. Knowing that we had a global gender gap in access, and we'll talk a little bit later about use because there's also a usage gap. Knowing that we have a gap in access and use, it helped us in our IDA 18 policy commitments. We have now promised to work with 10 countries through their financial inclusion strategies to systematically and deliberately target the closure of the gap. It's not good enough to commit to universal financial inclusion. And we're also in 10 of our biggest lending operations, our financial sector operations, deliberately designing to close the usage gap as well as the access gap. And I can talk about that later.
Sure. Thanks, Karen. And moving now to Marco, the IMF. Last year you piloted sex disaggregated data in your FOSS survey. Could you tell us a little bit about that and some concrete examples of some of the changes and impact that data had.
Sure. First of all, thank you for inviting us. And I also want to thank Her Majesty. Let me tell you a little bit about the history of FAS, Financial Access Survey, and how we got the, and how do we get to the data disaggregated access information that we now are compiling. So in 2009, the then managing director and Her Majesty started an initiative, Access to Finance project. And then in 2010, the FAS started compiling data directly from suppliers of services. And since then, we've been, one of the main goals has been to provide data that is cross-country comparable, that is high quality, it has a strong methodology, and that complements also the data like Findex, for example. So along those lines, we started working on this initiative because, as you know, financial inclusion is not only a moral call, but it's also macroeconomic stability concern. But in order to have financial inclusion, you need to have financial access. And that's how we started this initiative. Now, a couple of years ago, we started with a pilot when we realized, and in fact, it was a commitment from the managing director, to increase the coverage of the data gaps regarding financial access. So we wanted to find out what's the access that women are having to financial services and usage of that, of those services. And that's where we started with the pilot. And we realized that we had to start from scratch. So it wasn't automatic. It took some prodding, some interaction with authorities, and eventually started getting more. And now we decided we're going to make it a permanent part of our survey, the FAS. And what is encouraging is that you see a steady increase on data collection that is disaggregated by gender. And from 2004 to date, you see a significant increase. Part of it, I think, at least that's where we want to read it, is a recognition worldwide that data on financial access by gender is very important. And I'll tell you a couple of examples. So it is true, when you look at the average, 40% of women have deposit accounts, and roughly the same thing applies for women who get loans. That's on average. But then it's nice to go deeper, get more granular data. When you do that, thanks to this data that we have now, realize that there are cross-country differences. Take the case of Malaysia. The gap went from 37, started closing a lot faster. So you start asking, what happened in Malaysia? What is different in Malaysia? There was some specific program targeting women entrepreneurs. We don't know that that's necessarily the solution. There are many variables, but it gives you pause to start thinking. This more granular data allows you to look at points where you have to start digging. You can start digging deeper, for example. Chile has been mentioned by several of you. Well, we know now, for example, they have a simplified deposit account, which may then account for why we see an increase of women having more deposits in the formal banking sector in Chile. So these are a couple of examples, and I can also get into the other branch of access, which is mobile money. That's what we're beginning into. And this is really very important because while we know that access through the banking sector is very important, we realize that some economies, low-income economies, have to start in places where access to financial intermediation is a lot more affordable than having to open an account. And that you can get through mobile money. But I can get into that a bit later. Thank you.
Well, thank you. I think that illustrates a range of, I must say it's music to my ears, the IMF, but I also know Madame Lagarde was driving that and Her Majesty also, so this is the way the world works, in mysterious ways. I do believe, is it unfortunately time for you to leave? Such a... Thank you, and I keep you need it. Bye-bye. Bye. Okay, bye. And how fortunate it is that G20 is Argentina this year. Okay, moving over back to Kia. And so let's go a bit deeper, because the FOSS is one thing, but then at the national level in terms of the role the central bank is playing in trying to get and support the financial services providers to provide you the data. Where are you at with this in Zambia?
Well, we have been fortunate to get a grant from the Women Financial Inclusion Data and AFI partnership to develop a framework for collection of sex disaggregated data. AFI considers the issue of data as a very critical one. We have the General Action Plan, which is the AFI Network's commitment to gender and women's financial inclusion. And action point number 6 of that is actually requiring member institutions to develop and promote the collection, analysis, and use of sex disaggregated data. So under that program, we've had this grant. So far, we've been able to do some peer learning. We've been able to engage with the Mexican authorities to just learn what it is that they're doing. There are not very many countries, actually, that have been collecting sex disaggregated data. And our next point of call is to engage with Chile, which everyone has been mentioning. Chile has been collecting sex disaggregated data for the past 17 years, so we felt that it would be a very good learning point from them. But challenges are many. One of the issues that we have to deal with is that there are so many gaps. In our case, the only data set that we were collecting is credit data. We have a credit data monitoring system. And even that now, as we are getting wiser, we found that there's very little that we're interrogating in that credit data, and we need to go deeper. But there are so many other indicators that we need to develop, others that may already be existing that we need to put together. And it's not very helpful that we are not able to find any international standard, so it's really a learning process. We also have to work with the financial service providers themselves, who are going to be required to collect the data. We do not want to take a mandatory approach. We want to take a collaborative approach, make them appreciate why this has to be done. But we know that there's a cost, both to the regulator as well as to the financial service providers. And we can already see that quite a good number of them, they'll probably need to introduce new management information systems, because what they have now is not configured to collect that data. And then, of course, capacity building. In our case right now, we are already looking for a consultant. We thought, an international consultant who can work with a local consultant to pass on capacity, but there'll be need for a lot of capacity building in collection, in analysis, and even in how to use this data. So we are in for a long haul, but we are hoping that by the end of this year, we'll be seeing significant progress, and we're intending to begin implementation in 2019.
Well, thanks, Takia, for leading the charge in this, and I believe Egypt is also a test case under this strategy. So over to Julie, in terms of Latin America, what's the work that the bank has been doing to support governments and others in the public sector produce the data?
So Takia mentioned Mexico, so I'll talk a little bit about Mexico, because I think Mexico has one of, if not the leading demand-side survey in the marketplace. And you'll hear from Fernandez in the next panel, but Mexico then thought, okay, we need to do some work on the supply side. And most of the supply side surveys are about individuals, not about SMEs. And so a big part of the goal was to say, okay, how do we do a supply side survey that is not just individuals, but is individuals and women-owned and women-led SMEs? And it sounds simple, but it's much more complicated than it sounds, right? Because first of all, you have a whole bunch of banks, and they each have their own definitions usually. So how do you work to create a definition that can allow everybody to, and you to aggregate the data. Second, if this is really going to be useful, it needs to take the data and the definition and the way this is being thought of and incorporate it across the various surveys that the government does. So, you know, agricultural surveys, other manufacturing-related surveys, other state-owned banks. So, you know, this was, I think, a really thoughtful approach, and we played a role in helping the Mexican government think through these issues, came up with a set of recommendations that are now being considered. And I'll take another case, which is Jamaica. So in Jamaica, there was really the beginning of, well, is this important? And why do we need to do this? And do we need to do this? And oh, by the way, I don't think you understand, because our problem isn't women, our problem is men. Well, it is true that educationally, women are far out advancing men. But actually, none of us know, because the data has not been collected, whether that translates itself into the financial system and access to credit, for example. Because we do know that the senior management of companies in Jamaica does not reflect that women graduate from high school and university at much higher rates. So who's to know what's happening in the financial system? So actually the conversation there was about, you need to know about your boys and men as much as you need to know about your girls and women. And we're in the midst of working with the government to introduce a universal electronic identity. And so making sure that as that's introduced, it becomes a tool in the financial system for sex disaggregating, for know your customer, for customer due diligence, for each of the things that the financial system needs to deliver. So those are two ways.
Thank you. Okay, Karen, the Findex, fantastic yesterday, seeing the some of the analysis. I just want to go a bit deeper into, for instance, why in Argentina are more women borrowing housing loans than men? It's the only country in the data sample that we saw. But so it's a great survey, and it's obviously gotten much better, but to what extent has it resulted in efforts to deepen the data ecosystem, either nationally or internationally?
So one of the things that I think is great about the Findex is finding these snippets of facts, like Inez just mentioned, which then means we have to go and do a deeper analysis. And I actually think that on the deeper analysis, it's not going to only be about the banking system and so forth, but it's going to be all about property rights regimes. It's going to be about the social norms. It's going to be about the demographic transition and movement from rural to urban. And there's a lot of things that will come into it. But it's great at pointing us in a direction of doing the research. We need the data ecosystem. And Julie mentioned some of it. One of the things that I think has been important about Findex is it has focused us on the necessity of individual level data. A lot of the data that we have is at a much higher aggregated level. So most of the household surveys that give our poverty estimates are collected at household level. And we've learned from Findex and others that we need to go within households. And there's a lot of information on financial inclusion that we can actually start to collect now in specific ways in a household survey, a household budget and expenditure survey. But we need it at the individual level. It's also stimulated us to look at the enterprise surveys that we collect. Julie mentioned SMEs. The enterprise surveys that the bank collects are a really important source of information, particularly on small and medium, but on other size segments. And for the first time, actually through this new Women's Entrepreneurship Finance Initiative, the bank group is adding questions. We'll have a full enterprise survey module that gets information on female and male-owned SMEs using the IFC definition of what constitutes a female-owned, led, or managed firm. So I think that's really important. And the other thing it's encouraged at least the bank to do, I don't know if any of you were with us 2 weeks ago, but we announced the new edition of Women, Business, and the Law, which is a really important complementary resource. It gives information on 189 countries around the world on legal economic discrimination against women. And it looks at banking regulations and financial regulations, but it also looks at marital and family law. And 104 countries have at least one law discriminating against women. But one of the things that we're doing as part of Women, Business, and the Law is to complement the Findex data by going deeper into the laws about financial inclusion and access. And stay tuned for that. We're going to be able to release that in about 3 more months. So that will be something important. But the other thing I think is important is that countries need to go deeper and to collect their own data. One of the things that we're missing is, from the Findex, is a subnational level. And you can get that through country-level data. And we have data sets called FinScope, for instance, which exist in countries in sub-Saharan Africa. You can get the subnational variation. We also need much more data on the product types. You mentioned credit, but there's many other types of financial services and many other population segments. Julie mentioned insurance. We don't really have information on males and females who have insurance, to the extent to which they're accessing insurance projects. So we really need to go deeper there, and it really needs to start at the country level.
Thank you. And the same question to Marco in terms of the FOSS, and has it helped? What has it done inside the IMF? Has it deepened your thinking on this issue? And to what extent has it supported further work on either the national or international level?
So let me give you the answer in 3 components. First one is the data is already being used internally for a number of projects, research. We have, for example, a financial inclusion index that we develop in-house. We also have used this data for, like I said, research analysis on financial inclusion and financial access for women. So we have that in-house. So it has informed that. In terms of countries, I think the importance of FAS can be seen, at least that's the way we want to see it, as sort of motivating countries that have not been following, doing this data, gender data segregated on a regular basis collection, doing it more systematically. So with the case, for example, that comes to mind is the case of Peru and Colombia. Both had some data. They have been thinking about it, and I'm clearly simplifying the whole process. But bottom line is, eventually they realized when we approach them and we're asking for the data disaggregated by gender, then they realize so it's probably important to have it that way. And then they started collecting it, and then they have their own initiatives in parallel. And so I think it sort of propelled these countries, and we assume other instances where we don't know firsthand, has created this incentive for countries themselves to start these initiatives. And then going forward, one of the things, as I mentioned earlier, in terms of what more granular data allows is to see cross-country differences. And also within a country. So let's take within a country, let's take Brazil. In the case of Brazil, we see that on average, let's say, is very close to 50% of women having access to loans. And so you say, well, then we close that gap, at least in Brazil. When you look closer, we realize, well, that may be true for small loans, but not for larger loans. And so that starts sort of bringing the question, so what is driving this difference? But it's only because we have this data that we can ask these questions. And that's exactly the reason why we think this data makes a big difference. Also, another step forward that we want to do is going into more outreach. So we want to step our outreach because we're realizing, just like countries see that we have this initiative and they themselves start gathering more data, we notice that many, or not many, at least some countries have those initiatives on their own. And so we need to learn from them what is that they've been doing, what works, what can we learn from each other. And also another thing that countries, I think, are learning is having some peer learning experiences. Because when we have this information out in the reports, in the pamphlet, on their notes, they're going to see how come this country is really closing the gap at a faster pace than we are. And we propose, we flag, we haven't done the deep research yet, but we flag. It could be due to labor participation that is different for women and men in different countries, and so forth. So by flagging these, they themselves can engage in some peer learning and say, maybe we ought to be learning what is working in those countries, what initiatives, and so we hope then the data itself contributes to that effort.
Okay, no lightning round question? Okay. I'd like to thank our panelists. Yes, Chiga, you can certainly have the last word.
Okay. Yeah, no, I just wanted to, Karen mentioned the need for national data sets. The project that we're doing in Zambia is actually a pilot, and the intention is to collect supply-side data. And if it works well, the intention is that it will be replicated in other African countries. So I think in response to what Her Majesty mentioned, some work is being done to have both the demand side and supply side data. Same country.
Okay, so I'm going to have one thing too. It goes back to that survey I started at the beginning. So turns out that 35% of banks say they actually have some disaggregated data in Latin America and the Caribbean, but only 20% say they use it for anything. Okay, so it's not just we need more data. We actually need people to use the data to take action.
Right, and we need the international players to connect the dots, even when they live across the road from each other. I'm not sure that happens all the time. So thank you very much to the panelists. Round of applause, please.
So Danielle is the Vice President of Banco BH de Leon in the Dominican Republic, which is the second largest private sector bank. Danielle has been working on, has actually implemented their strategy for becoming the bank for choice for women. And right now, Danielle is leading the charge for digital transformation of the bank. So welcome, Danielle. Next, I'll invite Heather Melville. Heather? So Heather Melville is the Head of Business Inclusion Initiatives at the Royal Bank of Scotland. RBS's UK brand, Natwest, is a leading lender to SMEs in the United Kingdom. The bank's Women in Business program actually dates back to 2003, so it's actually a very experienced program and is now expanding to reach private and corporate banking. Heather's career as a bank spans more than 30 years, 15 of which have been with RBS. And Heather was recently awarded an OBE for her services on gender equality. Next, I'll invite Maria Fernanda Trigo. Maria Fernanda is part of the CNBV, which is the Comisión Nacional Bancaria y de Valores in Mexico, and which is one of the regulators for the financial institutions and supervises all the financial institutions in the sector. Fernanda is the Director General and responsible for financial inclusion. Next, I will also invite Peace Uvase, who's the Executive Director for Financial Sustainability at the National Bank of Rwanda. The National Bank of Rwanda has made a strong commitment to increase women's financial inclusion and has been using sex disaggregated data for a number of years and is now working on trying to get this data systematically. So welcome all. So, Danielle. Danielle, I'll begin with you. BH de Leon's women customer base was already at like over 40%, and yet you decided to go ahead and develop a strategy for women. So what was it that made you target women as a distinct market? And how did you start off? Because you didn't have data. How did you start off? So could you just give us a sense of how did you make that leap, and what did it take to make sure that this was a business opportunity?
Okay, thank you very much. The first thing that we need to understand was the size of the market. Even at that time we started, we were not aware that we had 42% of our customers women. So we really need to understand what is happening with the market. And we, in terms of the market, find out three things. The first thing was that the involvement of women in the economy was growing at a larger rate than men, so we needed to see why was that happening. The second thing was to understand what were the main variables that affected that increase in terms of the growth. And we found out that women with a higher level of education were more involved in the economy. The other thing was that age was the other element that had an impact. And the most important one was the marital status. In the Dominican Republic, 50% of families are led by women. So in order to understand the involvement in the economy, we found out that 96% of women that led families were involved in the economy. So that was the first data that we gathered from different studies from the Dominican Republic. The second thing was, let's find out about our bank. In our bank, we almost 96% of our customers, we're a bank that has almost 1 million customers. 96% of our customers are individuals or SMEs led by individuals. So in terms of having data segregated by sex was kind of easy in terms of the information that we had. So we started looking at those three variables in terms of age, in terms of education, and marital status, and we find out that there was a large opportunity in terms of upselling or cross-selling. But in order to find out, we also find out in terms of savings, in terms of risk, and women were much better in those two variables. So we decided to go further and present our business strategy to the board of directors in order to gain a market opportunity.
So can I just have a follow-up question? Now that you're leading the digital transformation, what kind of data now that you're looking for now that you didn't have at that time? You did some work on the banking on women's side. So now what kind of data pieces are you looking for now?
Data must be a core in the bank's business. And in order to get data, it's just not data to get description of the number of customers that we have or the number of products that we have. But we need to collect data in order to understand the behavior of both men and women and to have our value proposition much more focused on customer needs. So that's where we're working right now.
Thank you. Thank you. Heather, moving on to you. In 2017, RBC's UK brand Natwest reported a year-on-year 36% increase in women-owned business accounts and 26% in lending to women in business. But when you started out, you didn't have this data. So how did you actually make this, how did this data help in making a business case for the program internally? And what kind of data did you need to start this?
Okay, I suppose really if you think of it as a market opportunity for any other product or service, the first thing you need to do is understand what the segmentation of your market is. And I think what's really interesting, when you've got data, it's actually the driver for change. So rather than just talk about this really nice initiative, that's a good initiative to do, what we then did was break down exactly the number of female customers we had. We did some research behind that. And also one of the things is to remember that when women complete the Net Promoter Score, which is very important to all the bankers in here, they are 7 points higher than male, right? So that means, for us as an organisation, that was something we had to look at. And when you're trying to get budget in an organisation to drive through any kind of project, what do you need? You need the data. You need to be able to prove to them that this is going to be successful. You've got to also prove that you've got the market segmentation and it's something that's stretching, but also something that's quite innovative.
Okay, if I may, and I'll just pivot to something that's a little bit different. So the RBS Group was an early adopter of the UK government's pledge of Women in Finance Charter, which is a pledge by over 200 financial institutions to work for gender balance, and which includes a commitment to publicly report data. And this data on gender pay gap was just reported. Quite dismal, I think, for a lot of banks. What do you think this does? Does it create incentives for financial institutions to actually close the gender pay gap, or do you think there will be some unanticipated consequences of this public commitment?
So I'm quite excited about this because it's the first time ever it's been done in the UK, right? And when you do something for the first time, everyone's scared. So lots of people were holding on to producing their data. I actually sit on the board and we had to present this on TV, so it was really good. I kept watching. There were 11,000 companies that needed to report, and up until 4 or 5 days before, there were about 6,000 companies that had reported. And we were thinking, if you haven't asked for the PIN, just like your tax return in London, you're not going to make the deadline. If you don't make the deadline, there's a fine, but there's also a reputational risk, okay? And then leading up to the night before, I saw the numbers moving up to 8,000 plus. I went, whoa, I see what's happening here. Some organisations thought they would be smart. If you actually do it at the end, when everybody else is doing it, no one's going to notice you, right? Well, actually, that was the wrong way to think, because what people were doing were looking at the people who hadn't actually put their reports in. People who had, for me, were the people who actually really care about this and who were running campaigns and are still running campaigns to do something about this. So for us as an organisation, and I'm going to talk about the finance industry, we had one of the biggest gaps, right? But that's not a surprise. Okay, the reason we all have that gap is because we don't have any female talent at the top. We've got to bring through that pipeline of talent, and as you bring through that pipeline of talent, you start to close the gap, right? It's a simple mathematical equation that we have to come to. And there is no point bringing women now who aren't ready to go into those roles and saying, good, this is really good, we've made those numbers, now we can go and forget about what we want to do, because all you're going to do is take us 10 steps backwards. And we've seen when organisations have done that, right, where they've just said, let's get a couple of women and let's mix it up and get a few people from ethnically diverse companies, and we've got a fantastic board, but you haven't changed the culture of the organisation. So you haven't created somewhere for them to stay and be sustainable. So actually go 2 steps backwards. So the momentum that's happening in the UK at the moment is the companies who haven't filed, and there are some companies who didn't. Everyone's watching to see what's happened, but also what's interesting is wherever anybody's filed so far, next year they're going to be improved, right? Because they know that the whole world's looking at it. And I might just end by saying that what we've also seen is that young people are now have the evidence to decide where they want to work. Right? And I think that's really important. People will work for organisations that are really transparent and really care about this agenda.
Thank you. That was really good. Thank you. All right. So, Peace, actually, I'm going to come to you next. I'm going to skip Fernanda for a bit. The National Bank of Rwanda has collected supply-side sex disaggregated data since 2008. So what was the impetus, first of all, for this? And what did you use, actually? What was the process for sex disaggregating the data?
Okay, so as a country already, the issue of women gender empowerment is really at the core of the development agenda of the country, given the historical issues, given the issues that women generally suffered during the genocide. So post-genocide, this became center stage for the country's agenda. It is actually a core, it's instilled in our constitution in terms of setting aside 30%, a quarter of at least 30% for women in leadership. And we've done very well on the political front. Today, Rwanda has the highest representation of women in parliament, 64%, almost 60% of the cabinet is women. But then as we sort of turned the leaf in terms of economic development of the country. And it was a couple of things that were happening about the same time. So there was the issue of now redesigning the country's sort of strategic plan, and we're looking more on the economic side of things. And we also had done our first FinScope survey in 2008, which indicated that only 42% of the population, and this is still globally, of the population was actually financially included. And then it started to, we started to ask ourselves questions. So we've made these commitments for women in the political front, but on the economic side, what do things look like? So we've seen this data on financial inclusion. Only 42% of the population is included, but what does that look like for women? We didn't know. And about the same time also we had, as a country, we issued a national ID, and that was really a great point to start, because now that the financial institutions had this ID as a KYC tool, then it was going to be, a great starting point for us to start collecting this information. So that became sort of the starting point, and we mandated the banks to start collecting this information on sex disaggregated data. But it was still more or less on an ad hoc basis. So in 2012, with a partnership with the World Bank, we engaged with Mix, who did a survey, a supply-side survey, and came up with a couple of recommendations on financial inclusion indicators, and one of those was actually on the sex disaggregated data. And on the basis of these recommendations, we went back and reviewed our reporting templates from the financial institutions, and that became sort of a starting point for us to formalize the way this information was being collected. So yeah, in summary.
Okay, thank you. Could you also speak a little bit about, I mentioned this earlier, that you're trying to automate and institutionalize the process. So why that? Why that? Why that? Why that?
3%, but that's generally, but in terms of formal credit, only 12% of the women were actually accessing credit. And on the backbone of this, as a policy decision, we actually came up with a Women Guarantee Fund, which will support women both on the individual front and women-led SMEs, as long as you have a viable project, but the issue is basically just a lack of collateral. The Women Guarantee Fund is able to come up with at least 50% cover for the funding that is required within certain benchmarks, and that is really one of the key areas where we've seen a significant impact of this information being gathered.
Thank you. Thanks. Moving on to you, Fernanda. Fernanda, Julie mentioned that Mexico, of course, has been the leading pioneer in the demand side, disaggregated data, sex disaggregated. So why? Where did you all start, and how did you have to collaborate? What kind of collaboration did it take between CNBV and the National Statistics Office, for example? And similar question to you. What kind of policy, how did that affect your policy? Did it impact policy changes in any way?
Sure. So CNBV has been preparing a report on the National Report of Financial Inclusion since 2009, but it was at that moment using only supply-side data, which was the data that the financial institutions were reporting. So we had half of the picture. We didn't know what was happening on the demand side. And that's when we started working with the National Statistics Institute in Mexico, who are the ones that carry the census. And it was very important for us to work with them so that we could use their methodology and build a sample size that could assure us that it would have national representation of the data. And why we decided, well, this survey has representative national results by gender and by rural versus urban areas. And it was important for us to get that data because we knew women were underserved, but we didn't understand why and what are the key barriers. And we had an idea of what were those numbers, but we needed real numbers to make decisions and to push forward the thinking. So I'll speak a little bit first about what the collaboration with the Institute has been like and then what has resulted from the data. So on the collaboration, we work very closely with them. We design the survey together. We get their feedback. They do hundreds of surveys a year. And so their input on how to ask the questions, it's very relevant. This is a national survey, so it's conscious about the regional. We even conduct the survey using some dialect in some indigenous areas of the country. And so they help with the design of the survey. They are the ones that define the sample size and how much of a size we go through each state. And then they've been also key on also helping us finance the survey. This is an expensive survey. It's over $1 million, and that's why we can only do it every 3 years. It would be too expensive to do it yearly. And we've been collaborating with them. Thanks to their support, this year we're going to double the size of the survey. We used to conduct 7,000 interviews, and now we're going to do 14,000 interviews. And what we're going to get with that is now regional results. So we're not going to only have national, but we're going to divide the country into 5 regions. And we've known for a fact that the southern part of Mexico is where we have a higher needs of financial inclusion, so we'll get even better results. The results that we've had, putting together the demand side with the supply side data actually led our work for the National Policy of Financial Inclusion, which was published in 2016. All the analysis that we did with hard data identify what were the key barriers, and the policy provides specific actions on how we're going to work on each of those barriers. And some of the interesting facts that we found specific on gender, there is a gap between men and women. There is around 7 points. The difference closed between 2012 and 2015, but there was still a gap between men and women owning accounts. But what was very interesting is that rural women now have more accounts than men. And that's a direct result of the efforts to give bank accounts to all the beneficiaries of the cash transfer programs for women. Another key fact that we've learned is that women tend to use less, even those women that do have accounts, use them less than men, and that they don't like to visit the financial institutions. They don't like to go to the branch, and they use ATMs less than men. However, what we're seeing is that they are the higher users of banking agents. And we think this is a direct result of the agents being in commercial stores and being closer to home and closer to their daily lives. And so what we're pushing now is to have better designs of products that are thinking about women. We see that part of the results in improving the number of adults that have an account are a direct result of two large initiatives. One is promoting that people get their paycheck or their salary, in an account, and the beneficiaries of social programs. But what we see is that women don't, it's the majority of men who have formal employment, and so this program about having their salary deposited into an account works, but not with women. A lot of them work at home or in informal jobs, and so we need to push forward on that front. And on that regard, we've been working with several companies and banks who are interested in trying to transmit the data. And we've been working with a fintech company. And they realized that the 90% of domestic workers are women, and that they are a very large underserved market. And so they've been developing an initiative, getting support from CNBB, from also the Ministry of Finance, to develop a product that will financially include domestic workers. And so they are building a platform where the employers can easily enroll their domestic users and provide them with not only a bank account where they can get their salary, but to also receive insurance and also open a retirement savings account. I think I ran out of time.
Yeah, thank you, Fernanda. So I'm just going to open it up for one last question, and it's open to all. But basically, what can regulators or governments do better to help support, improve, expand gender data? And what other support do banks need in order to set up systems to disaggregate data by sex? So any thoughts? First, Danielle and Heather, maybe, and then Peace and Fernanda.
I think that in Dominican Republic, the first thing we need to do is the government to push disaggregated data for the banks. We don't have that in Dominican Republic. And definitely that could bring a lot of opportunities in terms of business-wise, but as well it could bring a lot of financial inclusion for women in the market. The other thing that we need to do is to bring financial services as a whole. Not only banking information, but also insurance information in terms of insurance, both health and general insurance information. Why? Because for women, as we found out in the Dominican Republic, the most important things is their family in terms of education and health. So that's the other part of inclusion that we need to think about.
I think we can say quite clearly that when the government gets behind something, it happens. They've been talking about the whole gender gap for many, many years, and people have hidden and not done anything. And once all the government parties got involved, they all came together and said, this is something we're going to do for the country. It happened. So I think to myself, I would like to see more of this kind of coordination across the various political parties, because the one thing that's consensus that's not going to change is it's always going to be women having babies, right? And so that's the thing that they always catch us on. So I think there's a thing around information that's decimated out to people. And how does that information go? Don't always send them to the intranet. Find ways that different people communicate in different ways. We did something in a magazine last year, which was phenomenal in terms of we looked at the number of women that read that magazine, the kinds of women that read the magazine, and that was one of our routes to market. That got them thinking about us. So I think organisations and governments need to think about that when they're doing their campaigns. The other thing is education. Education is so key, because especially in some of the emerging countries, but also I think even in the UK where we're pretty strong and pretty built up, unless you get information to people in a source that they can read it, they're not going to. And that's a big part. Let them know what they need to know on their phones, right? Because they'll look at their phones and think, right, that I didn't realise that product was coming out. Who else has it? What countries is it in? How can I get it? Those things, very quickly, very timely things. And I think networking opportunities, days like today, are great for us because it's a business thing, right? But we need to create these in our environments that we work in. And that's where we've been really powerful. We've got 540 women in business ambassadors, which are made up of men and women. And I have to tell you that we had the busiest ever International Women's Day, where all around the country this year, men and women were holding networking events. And we think we touched more than 2,000 female businesses. So for me, that's really got to be a key thing. And the final point is around recognition. Some of these businesses that are doing well. Look for awards in your business, in your environment, so you can showcase some of these businesses. For me, it's great to win, but it's not about the winning. It's about the profiling of those businesses. Because what happens is individuals running those businesses, and women in particular, are not very good at telling people how well they're doing. And in this day and age, if you haven't got a digital footprint that tells people how many people are following you or how many people are interested in your products and services, actually, when you go to people like the banks and other organisations, they say, well, actually, where's your market research? So I think it's really important that the recognition, the awards and things that people, particularly in their industry, are put forward for, really does help them drive their business.
Thank you. Fernanda?
Sure. I'll try not to sound repetitive, but I can only agree with what you were saying. I think on the one hand, it's very important, at least on my behalf, on regulators, to disseminate the data. As Your Majesty said, it's not data for the sake of data, it's actually what you do with it. And so at CMBV, while we devote 1 year to planning and to actually conducting the national survey, the next 2 years are all about disseminating data, making it public, making analysis, trying to find forums where we disseminate, interact with the banking association, show them where are the opportunities, because they need to take that data and actually make decisions, develop products, see where's the opportunities. So it's not only investments on generating the data, but actually on promoting that it is used and understood and disseminated. The other would be making commitments. You were saying it's government who has the power to move the needle and to push and motivate the efforts. I think setting targets on women and where you want to go and where you need to achieve does motivate and coordinate all actors, and that's what we need.
Peace.
Well, I think the only thing I would add there, it's more or less been said, is really use the regulators' convening power to actually get the engagements happening on a local level or on a country level with all the important stakeholders in this agenda. I think I agree totally with the issue of mandating the collection of the data as well as analysis and dissemination of the information.
Thank you. Thank you. So we did hear some really important takeaways for the regulators asking. It has a cost, of course, for the institutions, but asking for data is a good thing, clearly. I mean, even the ones that pay the cost agree that it's worth doing it. And we heard some good tips from both Danielle and Heather that there's some things that, as institutions, that you could do also independently without the convening power of the regulator, including doing some things internally to showcase and what women need, and showcase some businesses, because that's what's really required is these role models and to build confidence in people. So a round of applause for this wonderful panel. Thank you very much.
Great, thank you so much. And I will continue, I think, on the tone that Sharmila was saying and turn it over to all of us and say, what can we do next? And what can we all do to promote women's financial inclusion? On our part, the partners, this partnership wants to announce, we put together and all the organizations have signed a set of partnership principles. And you have them, I think they are on your folders. And they're basically 5 principles. I won't read them because you'll get very bored, but basically they're asking for high quality, a commitment to high quality sex disaggregated data. And I think it's very important, the quality part of sex disaggregated data, and a commitment to global databases that include sex disaggregated data, the importance of sex disaggregated data at the national level to support the business case, the need to work together, that I think has been very clear today that we all have to work together. And finally, and I think that this is very important also, the ethics of using sex disaggregated data responsibly and objectively. So I am happy to say that having signed the principles, what Data2X and the partnership will do, we will continue to coordinate and connect. We want to facilitate coordination efforts among key stakeholders, and we're going to be working on trying to harmonize definitions and indicators. We want to continue championing, raising awareness, highlighting the work of the sector, and catalyzing, piloting national data level work and developing knowledge products. Now, what can you do? There's obviously very key roles for regulators and policymakers, for financial service providers, and for international organizations. So I think that our last call is saying that together we can all ensure that the data not only will be produced, but it will be used to increase women's financial inclusion. Thank you all for joining us, and to continue the conversation, there's a reception, and please join us and we'll continue networking. Thank you.